Hi, my name is James Akua, and in today's video we are going to be talking about investing and trading of cryptocurrencies. Okay, so if you're going to be trading cryptocurrencies, there are some websites you're going to need to familiarize yourself with. Okay, the number one on my list is CoinMarketCap. So let's go to CoinMarketCap. So if you sign up for CoinMarketCap as at today, there's a gift waiting for you. Okay, so signing up on CoinMarketCap as a community member would expose you more to cryptocurrencies. You see here on CoinMarketCap, you have cryptocurrencies. You can know about rankings of cryptocurrencies. Recently added cryptocurrencies for people, some people that like to buy new cryptocurrencies. So you can see recently added cryptocurrencies here. You come to do on CoinMarketCap. When you come to CoinMarketCap, you come to check out data on cryptocurrencies. Okay, check out current price. Okay, Bitcoin is trading at 19,907 now. Okay, so you can see in less than an hour the price has changed to $20,000 per BTC. Okay, so that's how quick this market could be. Okay, so moving on to the next website, which is TradingView. Look first, then leap. Okay, so that's what TradingView is all about. TradingView is a charting application where you do your charting before you leap. So let's get started here. To quickly launch the BTC USD data chart here. Here it is. We'll launch the chart and see what's going on. So we'll change from the daily view to monthly view. This is what BTC has been doing since 2017 when it was launched. Okay, so this is what TradingView looks like, and this is what BTC monthly chart is. So I'm going to explain the candlesticks in another video. Well, this the green candle means price is going up, and the red candle means price is going down. It's meaning that each candlestick here represents 1 month of price action. Okay, so each candlestick represents 1 month of price action. Okay, if it was on the daily chart, that means each candle represents price action of a day. Okay, so this red candle, price going down. Okay, so each candle is a day of price action. So right away from this daily chart, you can make decisions from price action. Okay, so there's something known as an engulfing candle, which I'm going to talk about in another video. It's going to be in my trading tips. Okay, so watch out for my playlist, trading tips. Looking at this chart here, an engulfing candle is a candle that covers the previous candle. Okay, just like the name engulfing, it engulfs the previous candle. Okay, and this either means the price is going to go up or down. Okay, so if we can see an engulfing candle, you can see that this red candle here, engulfs the previous green candle. Okay, so that is a bearish sign. Okay, it means the price is going to go down. We can see here the price went down. Okay, so we have another candle here, green candle, and this green candle here is not engulfing this red candle. Okay, so it does not mean anything. Okay, so let's find another engulfing candle. Okay, so we came all the way here, and price was going down, price went down. We didn't see any engulfing candle. Okay, so but we can see one here. You can see that there is a red engulfing candle. Okay, the wick is high above the green, so this candle is a bearish sign. It shows the price is going to go down. Okay, so these patterns are not final. They could help you, and I'm just trying to show you that here, without even drawing any trend lines or using any technical indicators, I can just use price action to to make some decisions, okay? But I won't advise you to make decisions just based on looking at that. You're going to need to combine a couple of charts and a couple of indicators to make a decision, to get confirmation to make a decision. Okay, so well, you can see here that there's a red engulfing candle here. Okay, currently this the daily chart. We are still on the daily chart here. Okay, so you can see this red engulfing candle. Okay, and price is going down. So you can see some icons here. Okay, like for drawing trend lines and other things. You can add text to the chart and so many other things. So let's draw some trend lines on this chart to see how trend lines work. Well, before we do that, I would like to change to the monthly chart. I like to, when I'm doing analysis, I like to look at the longer time frames first, and I narrow it down, I come down. So starting from the monthly chart here, I'm going to draw some trend lines so we can see what BTC has been doing till date, till August 2022. Okay, so this is the month. So at the end of this month, this candle is going to close and would enter September. By September 1st, we'll have a new candle here. So let's go ahead and draw some trend lines on this chart so we can see how we can use trend lines to make trading decisions. If you want to draw a trend line, come here to trend line. Okay, so you can start drawing trend lines from here. So you can format your trend line, select your trend line, and let's have this trend line first. Okay, so we're going to change the color of this trend line to green. Okay, because it's going up. It's a bullish trend. Okay, so let me just take a minute to talk about bulls and bears. Okay, so in forex as a whole, we have the bulls and the bears. So the bulls are the people that believe that the price is going to go up, while the bears are the people that believe that the price is going to go down. Okay, so bears and bulls are used by the way these animals attack in real life. Okay, so the bears are attacking, the bulls are also attacking. Okay, but they are attacking in two different styles. Okay, so the bears attack with their claws downwards, while the bulls attack with their horns upwards. Finished drawing the trend lines here. Okay, so I used the green color for an uptrend and the red for a downtrend. Okay, so you can follow the trend here and see what price action has been doing. Okay, so from the trend lines that we've drawn here, we can see that we are currently in a bear market right now. The price is going down. Okay, so we need to know when this bear market is going to finish. Okay, so that the bulls can come in. Okay, so we need to know when price is going to go down and where it's going to stop before it starts going back up. Okay, so this is what the market does. You can't stop the market from going up and down. It has to go up, come down, go up, come down. We can see that on this monthly candle here, we can see that the candle is trying to engulf the previously green candle. Okay, so if this red candle engulfs this green candle, that means within the next 1 month we could have a serious crash in the market. Okay, prices could go down worse than it is now, but that depends on a few days from now when this candle closes. Now that we've seen that we're in a bearish market from the monthly candlesticks, I want to know, when is this going to end? When is this downtrend going to end? Is it going to end this month or next month? Okay, so we have to go down, look down at lower time frames. Okay, so let's look at the weekly chart here and see what the weekly chart is saying. Okay, so this is the weekly chart. Okay, so this is what the weekly chart looks like. Okay, so you can see here that in the past few weeks we've been in a temporal uptrend. Okay, so we've been in a temporal uptrend, and if we can remember these 4 candles on the monthly chart, it was just one candle. Well, here it has been broken down into 4, 5 candles. Okay, so you can get more details from these 4 candles of how the price went up. Okay, so that's the difference between the time frames. Okay, the longer time frames give you a better picture, while the shorter time frames gives you more details on what price action is doing. Okay, so let's go ahead and look at the daily chart also. Let's see. Okay, so still accurate, still showing that we're on the downtrend. Okay, so you can see more price action here. You can see more details in price action here and what price is doing. You can use other chart patterns and indicators to know what the market is saying. So I'm going to go ahead and talk about the next website, which will be getting on an exchange. I'm not going to waste much time on the exchange here. This is Binance. Okay, so Binance is one of the most easiest exchanges you can get on. Okay, it's pretty straightforward. You just start here either with your email or your phone number, and then they're going to ask you for your KYC. Okay, so every exchange needs your KYC to know their customers in the case of a fraud. Okay, so you're going to need to have a government issued ID card and some other details. You're going to explore Binance for a while. Binance is a centralized exchange, so you use Binance for a while, and after you're familiar with Binance, I would advise you then explore Uniswap protocol. Okay, so Uniswap is a DEX. Okay, it's called a decentralized exchange. The Uniswap protocol is owned and governed by Uniswap token holders. You can read more about Uniswap tokens here, and you can see about the ecosystem, the community, okay, which I believe you like to join. So you can read more about the Uniswap tokens here and explore the website. So this is the beauty of Web3 apps, exchanges like Uniswap. Okay, a publicly owned exchange. With Web3, things like this can exist. Those are the websites that you need to know to develop your trading strategy. Okay, so the first part of the trading strategy is select your coins, then know what the current price is and when you are going to buy. Okay, and then use chart patterns and indicators to set price levels. And the most important part is staying disciplined. Okay, so you stay disciplined to the trading strategy. Okay, so the first step is selecting your coins. When selecting your coins, you like to diversify your portfolio. Okay, so I'll recommend that you use 25% to invest in the large caps. You see let's just say the first 10 coins. Okay, because the stable coins are also there. Okay, so you remove out the stable coins. Okay, because you're not investing in stable coins. Stable coins are stable. 50% of the portfolio should go into the medium caps. Okay, so the medium caps are, let's just say the other altcoins that are doing well. Let's say the top 100 or top 50 coins. Okay, top 50 coins. So that would make up the mid caps, and the remaining 25% should go into the small caps. The small caps are pay to earn games, crypto, NFT collections. There are lots of projects going on in the crypto sphere that you could consider small caps. Okay, so as you continue to surf the crypto sphere, you come across small upcoming projects. Okay, and you like some of them. Some of them are games. Okay, that you can play and earn some crypto. Okay, so these are the small caps. You have to check out their target market, check out the technology behind the crypto project. Okay, if it's a game, you check out the technology behind the game, and if you believe it's going to work out, then you can invest in it. Okay, you also check how quick people are adopting the project. What is the current price and when are you buying? So you've decided on the coins you're going to buy, and you've listed them down. Now you need to stick to one rule, which is buy low, sell high. Okay, that's the singular almighty rule that I'm going to give you today. Okay, always buy low, sell high. Yeah, you're going to need to learn about support and resistance. Okay, so we have support and resistance levels on every chart. So you can see this red line here. It's a resistance level. So we have this uptrend here, and we have this resistance level here. Okay, so price went up and it could not go higher, so there was resistance here. So this is support. Okay, this is the previous resistance. It broke this previous resistance and it went up here to form new resistance. It went sideways till it found support here, and finding support here. So it found support here and broke support here, and went down to find new support here. Then we have an uptrend here, an uptrend that goes all the way up and breaks the old resistance here, finds new resistance here, and comes down here to get support. Okay, so this is new support, and look at this support and this support is around the same level. So support and resistance levels, this is how they work. Okay, so it goes all the way up here, breaks previous resistance, and goes all the way up to form new resistance. Okay, so this is how support and resistance works. Moving on to chart patterns, we have some classic trend reversal patterns here. The first one is the head and shoulders. You can see the uptrend. Okay, so we have an uptrend and then a downtrend. The downtrend goes but does not test the previous resistance. Then it goes back up, breaks previous support, and creates new resistance. Comes back down to another uptrend, previous resistance, does not break it, and comes down, forming the head and shoulders. Okay, so this is price action really struggling. Okay, so you expect a downtrend here to be bearish in this situation. So we also have the double top here. Okay, when you have an uptrend and it creates resistance, when you have an uptrend and it creates resistance, then a downtrend to previous resistance, then another uptrend to resistance, and another downtrend. So this is also price struggling, and you should expect a downtrend in this situation. Okay, so we have the inverted head and shoulders. Okay, so when price action does the reverse of the two above chart patterns I've explained, then you expect the opposite goal. You can find these chart patterns on your charting application, and draw them out and use them in the process of making decisions. I have a better picture of the cup and handle here. So this is the cup and handle. The cup and handle is best used when there's a prior bull run. Okay, so when there's a bull trend and you want to confirm if the bull trend is going to continue. The copper handle works very well in such a situation. So we have a prior bull trend, then there is a high, and then there's a retrace, and then the retrace is the price going sideways, okay, for a while. It could take a week or even up to a month. Then you have a breakout above the high that it has made, okay. So it breaks out, confirming that the market is ready to move on, okay. So but there's a correction. The correction comes to form the handle, and then it goes back to the breakout, breaks that new resistance, and the price continues to go up. This is a situation where the copper handle did not work. There's a copper handle and the price is expected to go up, but instead the reality is different. Price goes down. So these charts are not 100%. These charts are just helping you to think about what's going on in the market, and you use technical indicators to confirm chart patterns. Because you combine chart patterns with technical indicators before you make decisions, and even at that, it's not still 100%. So you have to actually monitor the markets, and after making decisions, you have to set stop limit orders, and these stop limit orders will help you get out of the market when things don't go as planned. So I'll give you some examples of technical indicators. In this video, I'll just be talking about only two technical indicators, and we'll talk about other technical indicators in my trading tips. So you check out my playlist, trading tips. I'm going to illustrate two indicators in this video: the Bollinger Bands and the Relative Strength Index RSI. The Bollinger Bands are these bands that you see outside the wicks of the chart. Okay, the Bollinger Bands, they are bands, you can see them around. Okay, and these indicators are available on every charting application I know. So you just input it, but I would cover how to insert these indicators on your chart in another video. Okay, so you have to check out my trading tips, my playlist trading tips. When wicks or the candles go outside the bands, it's a sign that the market is going to change direction. So if you see the Bollinger Bands here, if you see here long, see that it has come down outside the band. So, and the RSI also confirmed it has touched the line, this line of the RSI. So it means that there's supposed to be a change of trend. So, and you can see that the price went up. You can see the price went up here, and they exceeded this line on the Relative Strength Index. That's where you can see a temporal change in trend to the side here, and you can see other examples. If you look at the chart, you can see how the Bollinger Bands and the RSI here are working and are giving confirmation to each other. So if you see the positions for long and the positions for shorts. So short positions are bearish positions. Okay, short positions means you are expecting the market to go down, and you can see here that the market went down after the candles went above this RSI line here. You can see that there was a downtrend, and downtrends went all the way down here. This is very important, guys. Set your price levels. Use charts and technical indicators to set levels. Buy low, sell high. Don't chase highs. Don't chase highs because of the fear of missing out. Control your anxiety. Okay, there's a slang, FOMO. Okay, so the fear of missing out. Be fearful when investors are greedy, and be greedy when investors are fearful. Okay, so this is very simple. Be fearful when people are greedy, trying to get into the market. Okay, so when prices are going up and going up and going up, and everybody knows about it, and people are just getting into the market, the latecomers are getting into the market. That is the time when you should be fearful and be greedy when investors are fearful. Okay, so when the markets have gone down so much and everybody will like get out of crypto, and things are just going down, things are just going sideways. Okay, that is the time when you're supposed to build up your portfolio. That's the time when you're supposed to buy up crypto in bits. Okay, it's not a one day thing. You buy it today. The market is giving you time to gather volume. Okay, the market is giving you time to gather volume at this time. So when investors are fearful, that is the time to buy. Okay, and stay disciplined. It's very important to stay disciplined when trading. Stay disciplined to your investment goals. Okay, your first milestone was getting on board. You've gotten on board, you've set up your crypto portfolio, and you've started trading. That is your initial investment. Now take some time to do research. Take your time to follow crypto news, go to crypto channels, and read about cryptocurrencies. Just use that period to wait out your investment and actually watch your investment grow. Okay, and set milestones. It's very important that you set milestones so that you have a path, a direction to which you are going, not that you just be trading, taking profit, and you don't know where you're heading to. So it's important to set milestones. I gave an example here, milestone 48. Okay, you could have a milestone that you want to own 1 BTC. It will help you gain momentum on investing. It will help you, it will motivate you to invest and reach your targets. I would like to use this opportunity to introduce you to our own Web3 project here on Ace Data. Ever imagine that the coins on the top of the game you play a lot can be converted to real cash? That is what our project is all about. There are many pay-to-earn games today in the crypto sphere, but we promise that ours is going to be awesome. About the technology behind us, the ecosystem we will be using will be the Solana network, which is really fast and cheap because of the proof of history algorithm. We'll be giving out 10 units of this cryptocurrency to every community member for a limited period. Why are we doing this? We are doing this because we want to build a community-driven project and want to reward community members right from the onset. If you would like to join our community, fill the Google form in the description. You will set up a phantom wallet. You will send us the public address of the wallet, and we will send you 10 units of our cryptocurrency. If you found this information useful, please like, share, and subscribe.